This video is about price action, and I want to just go through some very basic ideas about understanding how to read the markets. So first off, what we can look at is this candlestick right here has formed about 20 minutes ago, and it would actually take another 40 minutes for it to finish. So each candlestick represents, or each of these bars represents 1 hour of data of what the market has done in the past. So when we're doing our technical analysis is we're using historical price to project future price action. So one thing to consider is, with that being said, with the 1 hour standpoint, is when you see a condition where the market comes down like this is the wick, this is where the market went to. If we don't wait for the candlestick to close, then it may look like a red candlestick, or it looks like it may go down, and there may be some temptation to enter the trade, and then here you can see that the market went against you. So really understanding that the idea of waiting for the close can give you a significant advantage of trading the markets, and understanding where these price may go. Okay, so again with this price here, you can see the long wick upwards, and the price might have been held for maybe 20 minutes or so, but if we didn't wait for the close of the candle, then again the temptation would be to enter a buy, and then here it went against us. So with the 1 hour standpoint, typical trading opportunities may arise once a day or so. You're using, again, historical price. Either you're using 1 days of price or a group of price in order to project the future price. If you're someone that likes the 1 minute standpoint, what you're really doing is you're taking the 1 hour standpoint and you're just breaking it down. You're taking that one candlestick that hasn't fully developed yet and breaking it down to 60 increments of that data. So that being said, is that our projections may be a lot smaller, and the opportunities may come and go very quickly. Okay, because you're actually considering less data to project bigger projections. So let me give you a better idea of that concept. If you go to the day chart, now we've actually considered this is 60 or 24 of those 1 hour candlesticks combined into that one candlestick. So this trading day hasn't actually ended yet. So this candlestick can still end up going down and ending into a bearish signal. Okay, so consider the trading day ending in order to enter the market. Okay, so the idea that I'm trying to present to you is that sometimes when you look at the market and you're actually looking at a candlestick like this, and here it comes down to this bottom here, this wick, then that price might be held for so long, and it'd be easy to enter the market right there, and then it completely goes against you. Okay, so if you analyze the market in a closing manner, then you may be able to take advantage of some of these ideas. So candlesticks itself, each candlestick again represents that period of time of data. You look at these candlesticks, they can give you certain indications of where the market may go. So for instance, this candlestick pattern right here is called an engulfing candlestick. We have a bull candle followed by a bearish candle and a close beyond this close right here, meaning that it engulfed it, and looking for a reversal. Now when you see this candlestick right here, when you have a massive break upwards, you can expect a pullback. So with these candlesticks here, you can see these long tails. That's showing you indication that there's a lot more buyers than sellers, and that there may be a reversal. So again, if you consider each candlestick representing what the market has done in that period of time, that can help you understand uh, the market behavior and what the price is wanting to do. Okay, so again, knowing what time frame you like to trade off of, if you base your trading opportunities on the day chart, here again, kind of give you a better idea is this is about a week's worth of data. So you might have looked for one trading opportunity based on that, on this break upwards, and that would give you a trade that may have lasted 4 or 5 days. Whereas if I go to the 1 hour standpoint, then here we could wait for a break upwards or downwards outside this consolidation, and seeing that we have a smaller trading opportunity. So your point of view is going to be a lot smaller, and your trade may not last as long. It may only last, several hours for the trade that you're looking for. So with the idea with just the candlesticks, they can give you indication of what kind of market if you're in a extremely volatile situation. So if you trade on the 1 hour standpoint, then again, your point of view is going to be a lot larger. But if you're trading on the 1 minute chart, one thing to consider is news events. Okay, so like I said, if you're actually looking at this, then if a news announcement comes about, one thing to consider is your spreads are going to widen, possibly less liquidity in the market, and your point of view of it going up or down could actually be very difficult. So for instance, it may spike upwards looking like a wick and then punching downwards. Okay, let me actually give you a better example of that. So if you go like this on the 1 hour standpoint, and then we break it down to the 1 minute chart. So let's actually look at right here where it has that long wick. So let's go there. Oh, let's see here. Okay, so we're going to look for that red line there and show you what I mean. So with the 1 hour or the 1 minute standpoint, even though you just get blindsided, is what I'm trying to say, is that you may see that there's a rush downwards like this, looking like there's a lot of sellers in the market. Delete that line. And then it'd be very tempted to put in a sell position here, but then the market goes against you and rises upwards. So the idea is that the 1 hour standpoint can give you a better point of view. So if you waited for the close of the candle, then you would actually have a better indication of that there's actually a lot more buyers than sellers. So on the 1 minute standpoint, it looked like it was coming downwards, but on the 1 hour standpoint, it's actually, there's a lot more momentum pushing upwards. So that just gives you just a short basic video of the candlesticks and price action and understanding the closing price, as well as the idea of just different time frames. Thank you very much.